Thinking about buying a home or investing in real estate? You might want to act fast, because these 10 US cities are about to see house prices soar in 2025. Let's dive into the top 10. Number 10, Daytona Beach, Florida. Once considered a quiet pocket on Florida's Atlantic coast, the Daytona Beach metro area is quickly becoming a hot real estate zone. Why? Affordability, proximity to growth hubs, and lifestyle appeal. Housing experts are forecasting home price increases of up to 12.5% here in 2025, driven by a growing wave of demand from families, retirees, and investors. Daytona is rapidly transforming into a commuter suburb for Orlando, just 30 miles away, offering newer developments at half the cost of Orlando's core. Meanwhile, Daytona Beach is shedding its outdated image. Major public-private investments in the city's riverfront, boardwalk, and downtown have brought in breweries, boutique hotels, and tech-friendly co-working spaces. As remote work takes hold, buyers from northern states are eyeing the area for both vacation homes and full-time relocation. Inventory remains tight and buildable land near the coast is shrinking. That imbalance between demand and supply is what could push prices far beyond earlier projections. Number 9, Tampa, Florida. Tampa may already be a known hotspot, but what makes it stand out for 2025 is how multi-layered its growth is. Projections show home values here could rise by as much as 13.2%, especially in the suburban ring from Riverview to Wesley Chapel. Why the spike? First, Tampa's job market has matured into a national magnet for tech, healthcare, and finance. Companies like ReliaQuest, Moffitt Cancer Center, and Citi have expanded hiring, and they're drawing educated talent from high-cost metros across the country. Second, the city is going vertical. Developments like Water Street Tampa and the Midtown Project are not just adding new residential units, they're creating entire walkable mixed-use communities. This level of investment suggests that Tampa is becoming more than a regional city. It's positioning itself as a southeastern alternative to Miami. Third, demand isn't just local. Investors are buying up rental homes in cash, competing with first-time buyers. Meanwhile, insurance and climate costs are forcing people to avoid South Florida. But Tampa, just far enough north and inland, becomes the sweet spot. Number 8, Ogden, Utah. Don't sleep on Ogden. While Salt Lake City and Provo dominate headlines, Ogden has quietly become one of the most undervalued markets in the western US. In 2025, some analysts say home values here could jump by up to 13%, especially in key pockets east of I-15 and near Weber State University. Here's why. Ogden offers unbeatable access to outdoor recreation, with 3 ski resorts, hundreds of miles of trails, and a thriving climbing community, but still remains remarkably affordable. Median home prices are well below Salt Lake's, yet the quality of life is comparable. What's more, Ogden isn't just pretty, it's employed. The aerospace and defense sectors are booming thanks to Hill Air Force Base and Northrop Grumman, and the Utah Inland Port expansion is bringing logistics and tech jobs northward. Utah's housing shortage isn't going away, and for families, remote workers, and retirees who want clean air, safety, and space, Ogden checks every box, and demand is surging. Number 7, Colorado Springs, Colorado. Colorado Springs is no longer just Denver's little cousin. It's rapidly emerging as one of the most dynamic housing markets in the Mountain West. With defense contracting, space tech, and healthcare driving the economy, the city's job base is growing fast. And so are its home values. In fact, high-end estimates suggest prices could rise by as much as 22% in 2022. Why the surge? First, affordability relative to Denver is key. While Denver's median home price is pushing past $700,000, Colorado Springs still hovers below $500,000, making it a go-to for both local movers and out-of-state buyers. Second, the military presence. including Peterson Space Force Base and Fort Carson, provides economic stability and a steady stream of new residents. Add in a strong quality of life index, excellent air quality, and investment in infrastructure, and you've got a city in high demand. But here's the real kicker: new housing inventory is tight. Building is slow due to zoning restrictions near natural preserves and mountainous terrain. That supply pinch, combined with surging demand, is why some experts are predicting price growth north of 20%, especially in the northwestern and eastern suburban corridors. Number 6. Tucson, Arizona. Often overshadowed by Phoenix, Tucson is finally getting its due, and the housing market here is poised for up to 21% appreciation in 2025. Here's what's driving the boom. First, Tucson is one of the last major warm weather metros with relatively affordable housing. As Phoenix becomes increasingly unaffordable and congested, younger buyers and retirees alike are turning to Tucson, where the desert lifestyle comes with less traffic, lower costs, and a more laid-back pace. Second, the University of Arizona continues to be a magnet for both students and high-paying biotech and aerospace jobs. Combine that with a growing startup scene and proximity to the US-Mexico border, which is fueling logistics expansion, and Tucson is becoming a real economic engine. What makes this more than just a blip is the scarcity of housing. Permits are limited, infill is slow, and new construction struggles to keep up. Demand is outpacing supply fast, especially in neighborhoods like Oro Valley and Vail, where bidding wars are already heating up. Number 5. Reno, Nevada. Reno is no longer just the biggest little city. It's now one of the biggest growth stories in American housing. With migration from California at record levels and limited housing inventory, Reno could see price increases of up to 20% in 2025, particularly on the city's west side and in nearby Sparks. So what's going on? First, Tesla and other tech giants have put Reno on the map as a manufacturing and logistics hub. The Gigafactory outside the city is a major job generator, and it's bringing in both blue and white-collar workers who need housing. But second, Reno's geographic location is a double-edged sword. Surrounded by mountains and public land, there's limited room to expand, which creates artificial scarcity. Developers are scrambling to build, but approvals are slow and land is expensive. Finally, lifestyle is playing a bigger role. With Lake Tahoe an hour away and year-round outdoor recreation, Reno is attracting high-income professionals from the Bay Area who can now work remotely but still want access to skiing, trails, and a city with real amenities. With limited inventory and rapidly rising demand, Reno is positioned for a major leap in home prices over the next 12 months. Number 4. Orlando, Florida. Orlando may be known for theme parks, but it's the economic fundamentals that are setting this city up for a potential 19 to 23% home price surge in 2026. Let's start with the job market. Orlando ranks among the fastest growing job hubs in the US, with major employers in tech, healthcare, aviation, and of course, tourism. But it's not just hospitality anymore. Companies like Lockheed Martin, Siemens, and L3 Harris have quietly built a strong engineering and defense corridor here, attracting mid-career professionals with high incomes. Now pair that with an influx of remote, and with the addition of the Brightline high-speed rail connecting to South Florida, its appeal has only grown. But here's the real driver. Inventory is critically low. Builders are playing catch-up after pandemic slowdowns, and demand is outpacing supply by tens of thousands of units annually. Neighborhoods like Lake Nona, Winter Garden, and even outer suburbs like Claremont are already seeing bidding wars, especially for new-build homes under $600,000. Add in a young median age, rapid population growth, and consistently rising rents, and you've got a housing market that's ready to explode. Number 3. Phoenix, Arizona. Phoenix has been heating up, both literally and economically, for over a decade. And in 2025, it could experience a home price jump of 25 to 30%, especially in fast-growing suburbs like Buckeye, Queen Creek, and Goodyear. Why such aggressive growth? Start with the job market. Greater Phoenix has transformed from a retiree haven to a powerhouse in high-tech manufacturing, data centers, electric vehicle production, and healthcare. Companies like Intel, Taiwan Semiconductor, and Lucid Motors have invested billions in the area, creating thousands of high-paying jobs and attracting a younger, more affluent workforce. Second, population growth is explosive. Arizona welcomed over 100,000 new residents last year, many fleeing high-cost states like California and Washington. With median home prices still lower than in those states, buyers are coming in with cash and outbidding locals, driving prices higher. Then, factor in limited housing supply and water restrictions. Despite vast stretches of desert, much of the land surrounding Phoenix is protected, undeveloped, or not zoned for high-density housing. That bottleneck, combined with rising construction costs, means home builders simply can't keep up, even though demand keeps soaring. And finally, Phoenix's appeal stretches beyond jobs and affordability. With its year-round sunshine, rapidly improving urban core, and strong rental demand, the city has become a magnet for both investors and owner-occupiers alike. If you're looking for one market where prices could truly skyrocket in 2025, Phoenix is it.